So now let's talk about priorities in bankruptcy. First of all, in bankruptcy, secured creditors are paid first, followed by unsecured creditors, followed by equity. Secured debt is secured by a lien. If the collateral value is greater than the claim is fully secured. If there's a second lien, it's secured up to the excess collateral. If, however, the value of the collateral is less than the claim, the under-collateralized portion of the claim becomes an unsecured claim. So let's just visualize that. If you have a $100 million claim and it's secured by a lien on inventories where the value of the inventories is appraised at $80 million, you actually have two claims in bankruptcy. One is an $80 million secured claim and a $20 million unsecured claim. This is a critical thing to understand. Even though you are, quote unquote, a secured creditor with a $100 million claim, the bankruptcy will the court will bifurcate your claim into two claims. One is your secured claim up until the value of your collateral, and the other is this unsecured claim that's treated like all the other unsecured claims. Right? So in order to understand how you do in bankruptcy, you have to understand this. You may not be as secured as you thought you were. Now, if there's sufficient collateral, there's no problem. If you have that same $100 million claim and it's secured by a lien on inventories where the value of inventories is appraised at $140 million, well, then you've got a $100 million secured claim, no bifurcation necessary, and there's $40 million in excess collateral. Now, if there's a second lien on inventories, well, then that second lien is secured up to $40 million on that collateral, which basically means that there is some security on the second lien. If there wasn't, then the second lien is unsecured. Okay, while secured versus unsecured creditors is a key distinction, or claims, is a key distinction for determining priorities in bankruptcy, there are priorities within those categories as well. In a bankruptcy, technically nobody in a lower priority class gets a penny until the higher priority classes get paid in full. That's called the absolute priority rule. In reality, though, keep in mind, as we're going to see this, actual recoveries often deviate from the absolute priority rule, as evidenced by the fact that often unsecured creditors or equity get some sort of recovery, even though higher priority creditors do not get 100% recovery. And this is actually by design. The bankruptcy court is designed to try to have all the claims arrive at consensus together, to get everybody to agree. And in order to get everybody to agree, a lot of times you have to give a little bit of recovery to the lower claims classes so that they don't cause a fuss. So let's break out the priorities a little bit more finely than we have before, where we just talked about secured versus unsecured. So let's start at the bottom with equity. Usually equity is wiped out in a bankruptcy. There's usually not enough value to give anything to equity owners. They're usually last in line. Then you have what is often the biggest group of claims in a bankruptcy, and those are called the general unsecured creditors. These represent the trade, all the accounts payable that you have, everyone that you owe money to on an unsecured basis. It also includes unsecured lenders, right? So usually bonds, to the extent that you've got notes outstanding that are unsecured. These are all people that you have to pay that often represent the bulk of the people that you owe money to, that have provided services in exchange for money that you haven't paid yet on an unsecured basis. And then you start moving up the priority rung. You have priority unsecured. Now, what's priority unsecured? These are unsecured creditors that get some sort of priority because of preferences that the court provides. So, for example, certain amounts of employee salaries. So imagine you owe salaries to employees that have accrued, you haven't paid them yet. There's actually, to a certain point, they get some sort of preference in the bankruptcy process, even though they're unsecured. There are other groups that receive certain priorities. For example, if you owe taxes, conveniently enough, the government will give itself priority in you having to pay taxes, so that, any tax liabilities you've got to pay before unsecured get anything, right? There's various constituencies that over time have created some priorities in the bankruptcy court for. The next level up is administrative status. Now, these represent unsecured claims that are generated during bankruptcy, right? So once you file for bankruptcy, one of the key advantages of the bankruptcy process is that they provide what's called administrative status that enables you to continue going about your business as a company by virtue of providing anyone that you're engaged in business with, that you owe money to get priority administrative status. So these are professional fees, get status. Anything that happens during bankruptcy, otherwise nobody would again provide you any credit, any sort of terms during the bankruptcy process. They wouldn't do that unless they felt comfortable that the court is providing priority over everyone that had claims pre-petition, before the bankruptcy petition. And then as you move up, you have secured pre-petition claims. So administrative status doesn't actually prime you over secured pre-petition claims, only over unsecured pre-petition claims. So creditors whose claims are secured by the assets of the debtor, right, get priority over all kinds of unsecured claims. Undersecured creditors, remember, as we talked about, bifurcate their claims into secured and unsecured. So keep in mind that just because you nominally have a secured claim doesn't mean that the court will treat that full claim as a secured claim. And then lastly, you have what's called super priority secured. And these are claims that have priority even over other secured claims. Lenders that lend to companies already in bankruptcy, DIP lenders. This is most common with those guys, where they will demand a priority status over and above the secured pre-petition claims. And judges, if they feel like it's in the best interest of the estate and that these guys are protected, it's called adequate protection, that they will still be made out as well, if not better, by granting this super priority claim. The judge will grant this seeming violation of the basic rule that secured creditors cannot be primed. Okay. So these broadly speaking are the various priorities in a bankruptcy. Actually, I want to go back here and just point out one thing, that in reality what you often see is, even though professional fees, lawyers and those getting paid in the bankruptcy process get administrative status, which is usually more than good enough, because usually the secured claims aren't, there's more value than just the secured claims. But if there aren't, or if this becomes an issue, what these guys are going to request is some sort of carve out for that basically ensures that they're going to get their money, right? So a carve out, so this is something you often see if there's a loan or a DIP financing done during a bankruptcy. Part of that DIP financing is that there's a carve out that says these, for professional fees, where professional fees are going to get paid before anybody else, and that the DIP lenders agree to essentially actually subordinate themselves to professional fees to a certain amount.